Hello guys, welcome to another video. This is my PNL for the week. You realize that I'm $32 down. I'm $32 deep in the hole this week too. But am I worried? Am I bothered? Not at all, because it's part of trading. You win and you lose sometimes, and it is what it is. So on the 9th, I took 2 trades, which was on USD, JPY, and USD CAD, all resulted in losses. And then on the 10th, I took a trade again on USD CHF, and it also resulted in a loss for me. But I'm cool. So this is my P&L for the week. I'll definitely go into the chat and show you guys. I'll go to the chat and show you guys the trades, and then let's see how it play out. Thank you. So right now, this is how I'm gonna do my risk management for next week. So you will realize that my current account balance right now is this 1956.09. So one thing about my trading is that I usually don't do my risk analysis on the account balance, the main account balance. Like if it's $2,000, I don't usually just say, "Oh, I'm risking 2% of." No. My mind is always on the maximum drawdown, because that is what you are allocated, whether I like it or not. As a trader, the maximum drawdown is the amount that is given to you to trade. Forget about that big amount. That big amount is just leverage, because you are not going to lose $2,000 to lose the account. You are going to lose maximum drawdown. So when I'm doing my risk analysis, I do use maximum drawdown as the biggest key to my risk management. So you realize that for this Maven 2K account, 8% is the maximum drawdown, which is $160. So what I do is that I've divided the $160 into 4 parts. You understand me? So it means that is 25% each. So if that is the case, then let me show you something here quickly. My account now is, if my risk analysis is that when I have exhausted the first 25% of the account, when I've exhausted the first 25% of the account, then I cut my risk in half. Then when I exhausted the next 25%, I'll cut the account in half. I'll cut the risk in half again. Then I'll continue cutting the risk into half. It is something that I learned from a very powerful trader. I'll shout him out, Mr. Ilya Sivkov, Trading Fanatic Channels. Anybody who is currently watching my channel should go and look at his content. Very good trader. He teaches in-depth analysis, structure, everything that you need to know. So I learned something from him, which is flatlining of your equity curve. Flatlining of your equity curve is if people want me to do a whole video about it, I can do a whole video. But it is an idea that you can't just fall. If you use original risks, you just fall deeper into the hole. Means that what you enter into a big drawdown that you can't get out of. But flatlining of your equity curve is that when you reach a certain percentage, you cut the risk. Then you cut the risk. And then when you rise above that risk, you rise above that percentage again, you go back to the original risk. It's a whole idea. It's a whole fascinating idea. So when you plot how you go back, how you go into drawdown, you realize that it is not a straight line curve. It curves to the right side. So this is my rule. Now if I lose $40, which means when my account gets equal to or gets below 1960, I'll cut my risk in half. So right now, most definitely, this is the first phase. So when this account gets below this percentage again and gets to 1920, means when I lose another $40 without half risk, I'll still cut my half risk in half again. So right now I'm risking $10 per trade. So what is going to happen is that I'm going to cut the risk to half, which is $5. When I get to this 1920, I'll still cut my risk in half again, meaning I'll be risking $2.5. And then I'll cut that risk in half to I think $1.25. You see, it's not about, people usually are under the impression that you should trade and you can lose the account fast and buy a new one. You see, if you are somebody who's not in a very good financial position and you don't even know what percentage what's the winning rate of what's the name of your strategy, you are not even sure, or maybe in that season your trading is not even working for you. It is not financially great for you to just be buying account, using huge risk, blowing it, buying new one. No. So I'm going to be strategic with this account. This account, I want to use it to build myself, to build my edge, to build my skill set. So this is it. So you look at this. When you look at this right now, you realize that I've lost more than $30. I've lost more than $40 on my main account, which is this. Right now my account is 1956. That means I've lost over 44. Let me show you. In total, I've lost more than $40 on the whole account. I've lost more than $40 on the whole account. Means I need to cut my risk in half. So I'll cut my risk in half until I get above $160. My risk will be in half. I'll be using half risk. Once I get to $160, I go back to my original risk of $10. But when I fall below this and I get to $120 again, I'll still cut the risk in half. And then when I get below $180, I'll still cut my risk in half. And finally, when I get below $1,880 again, I'll still cut the risk in half. Finally ending blowing the account for good or whatever, or maybe I'm now rised above. So it's a whole idea. If people want me to do a whole video, kindly tell me in the comment section below. But from next week onwards, people realize I'll start using half risk, and that will be how I'll be trading until I fall below this threshold, until I fall below this 1920 threshold, and then I'll cut my risk in half again. And when it gets to this level, I'll still cut my risk in half. So you realize that this is the lowest I can ever lose on this account. Means this is the lowest equity I can ever have, which is $1,840. Once I lose this, they are taking the account away from me. So I can only cut my risk in three places. Sorry, I cut the first I cut the first $10 into $5, then the 5 into 20 on this phase, and then the 5 into 2, and then the 2.5 into 1.5. Then I get to this level. So this is it. This is the risk management. This is how I'm going to be trading now for the next few months. Let me see how it plays around. Once I'm able to do well with this account, trust you, I'm going to go for a bigger account than this one. You see, prop firms are here to stay. And if you're a trader, you have the skill, but you don't have capital, prop firms can be a very great instrument for you to use. So I advise any trader out there that don't be scared to actually go for the smallest account size that you can ever go for, and then try your possible best to pass it. Not that you are looking for huge payouts. You are just trying to learn the skill, learn how the whole thing plays around, and then you start entering and treating this whole prop firm thing as a business. You go in there, you cash out, you bring it into your own personal trading account, and you go as a trader. So thank you all for watching. This is just a preview. It is just a snippet. It's not like I want to really go deep, but I just want to show you guys. Hello traders, welcome to today's video. I quickly want to show you my trades that I've taken for last week. I've shown you my P&L already in before we got to this place in the video. Was it a great P&L? Not very much. Made 100% loss this week. It's not like I'm not pissed at all. It's like I'm not pissed at all. So let me show you quickly what happened. I've always told you that my strategy also revolve around order block. If people want me to do a full strategy video, comment it in the comment section below. I'll kind of do my full strategy video. Resources like this are free online, and it's just I pick information from several different traders that I look up to, and then I just mishmash both into this nice delicious soup, and it became a strategy of mine that I trusted and I'm trading. So my strategy revolves around order blocks. I see order blocks at which are in continuation with a 4-hourly trend, and I enter into them. Simple as this. It's not like it's not rocket science. I see another block which is in continuation with which is in a continuation with a 4-hourly direction, and I enter into it on a lower time frame. So let me show you guys this first trade I took this week and the reason why I take it. So you realize that this is it. I saw this other block here, right here, this thing right here. This one is what we call another block. It is a candle whereby which a large volume of order has been placed on. So realize that the reason why it's a good order block is because of this big imbalance which is at this place. So an imbalance is measured when you pick the top, the high of the other candle, and then the low of the two candles after it, and then the space in between, which is the body which might lie within the body of the candle in between, is what we call an imbalance. It's called fair value gap in other strategies, but this is it. So when price pull back into those regions, we usually look for continuation of that direction which price move into. So price pull back into this range on this USDJPY on the 9th of July, and I'm like, let's do this. So the time was around 5 p.m. thereabout, 5 a.m. thereabout, and I quickly was like, let's do this. So I went straight into the lower time frame, which I'm going to show you guys very soon. And then price showed me the rejections, and I quickly jumped into them. So I quickly jumped into this trade, went about my business. I usually go for 1:3 risk to reward ratio. If I don't see 1:3 reward ratio, I'm not taking a trade, because with 1:3 risk to reward ratio, even if I lose 30% of the time, even if I lose 70% of the time and I'm positive 30% of the time, I'm so profitable. So I jump into it with an 8 pips stop loss, and this one is a 2.7. Why? Because it's like spread and everything. I calculated spread and everything into this risk to reward ratio here. That's why I realized that my actual risk to reward ratio has decreased. So it quickly went against me. That trade was the first trade I took that day. I've also taken another trade in the later part of the day, which I'm going to show you right now. So this trade resulted in a loss for me, which is minus $10. But slippage, you know that with slippage, you definitely cannot lose the exact $10. So when you post in my pen, you realize that the amount that I lost was the amount that I lost for that trade was 10.78. So I took a second trade that same day, which was on USD card. Let me show you guys quickly. It's the same thing. I'm not going to change my strategy today. I'm not going to change my strategy tomorrow. I'll add more things to it. It's not like technical things, but other information that I think will guide my strategy. But my strategy will remain like this till I die. Because traders, when they start going through drawdowns like this, they started questioning their strategy that does it work and stuff. Charlie, one thing about trading is that you can't always win. You can lose even for 6 months. You can even lose for 8. You can even lose for 10 months continuously in a year, and still at the end of the year you are profitable. It's like our mindset are ruined by maybe, I don't know whether it's 9 to 5 or what we expect out of life, thinking that what things supposed to happen because we should. No. You can even lose for 11 months. You can even lose for an 11 month and still be profitable just in a month of trading consistently. So, or you can lose for that whole year, but 5 years you are still profitable. So one thing about trading is that it is something that is for the long term. It always boils down to a narrative that if you are in trading right now thinking that you really want to make it in just 2 days, please stop and go and do any other work. Let me be honest with you. Because one thing about trading is that it is 50 years down the line, 60 years down the line, even 100 years down the line. That's how far I'm going to take this. If I will live to 125 years of age, I swear I'll be trading till I fuckingly die. Pardon me the use of the words. I'll be trading till I die. I'm not going to give up on this. I'm not going to give up on this at all. The freedom, I can't sacrifice that freedom. I can't sacrifice the money. I can't sacrifice any other thing that it brings me for anything else. So, this is a USD card trade. It's the same idea. Price pullback into the 1 hourly zone. I quickly saw the rejection on the lower time frame and I quickly jumped into it, and it resulted in a loss. I'm cool for that one too, and that's what I'm done for the day. Realize that from Monday, if you look at the calendar right now, you realize that I took this trade on the 9th. It means that Monday I couldn't take a trade, Tuesday I couldn't take a trade. I took this trade on Wednesday, and I took the last trade on Thursday, which is on the 10th, which is a USD CHF trade. This is a USD CHF trade. This is a USD CHF trade. USD CHF also resulted in a loss. You can see it clearly. It was also in the same thing that I showed you, but this one I'm showing it to you on the lower time frame to give it perspective. That just know that where I mark with this third box is an imbalance. You can see that in the lower time frame that there was a massive price push here, and so that was what marked the imbalance on the higher time frame, which is the 30 minutes that I usually use. So this is the imbalance that I saw. You realize that there's a gap between this and this, not that big, but it's a gap which I know price might come in and fail and pull back to the downside. It didn't. It quickly moved back to the upside for a loss for me. Am I cool? Still I'm cool. So next week, all the trade I took this week, follow my strict rule of 3 trades, 3 trades a week, and then 1 trade a day. Yes, I broke that rule with the USD pool and the USD card trade, which are the first and the second trades, but because I was so compelled with the second trade that I'm like, let me just take it, but also resulted in a loss. So I've lost for this whole week. I've lost 32.1 $7 with commission, which is $2.08. I plus minus $34.25 this week. Next week, my risk parameters will definitely change. I've already shown it to you in the previous video, and so this is it for my trading week. Thank you guys so much. So that's it, traders, for this week. My P&L wasn't that great. I've lost $30. Know that I'm risking 6.25% of my maximum drawdown. I've said it in the initial video that I don't really do my calculation based off of the what's the name, the original account size. I use the maximum drawdown because that is what I'm allocated. That is what I'm to conserve, not the main account. So I'm risking 6.25% of that account of my maximum drawdown, and I'm to make 8% on the first phase and then make 5% on the second phase to pass the account. So far I'm down $40. It's not like I'm worried about this, but my risk management will definitely change. I've also documented it on a video in this long video that I've made. So I'll keep you guys updated, and I want to actually segue and say this too. Documenting our journeys on these platforms, like YouTube and all those other platforms, is a very hard thing and a very conscious thing we are doing. Sometimes it's just a record of everything you've done at every stage, and looking back 10, 20 years down the line, be like, Charlie, this was me when I was actually in a single room just doing my thing. So to every trader out there documenting their journey, I'm very proud of you people. I want to say more grease to your elbow. Don't let anybody in the comment section try to break your spirit. It's a very difficult thing you are doing, which is trading itself, and being transparent and saying that I have taken this amount of loss this week, I've taken this amount of loss this year, because traders, we hate losses. If you are showing losses, know that you are not going to get any subscribers. Nobody's going to buy your course, because it's like, why are you losing? But the funny thing is that your mentor out there that is not even showing their losses are also making losses. Even they are even making, if sometimes even they compare P&Ls for the year and then a month of a transparent trader, and your mentor who is showing greens all year, so blues all year, you'll be shocked that this guy that has been transparent on a platform is doing far better than your mentor. I'm not shading anybody's mentor, it is what it is. So I'll continue to document my journey. I'll come here every week and post a video about how far I'm doing in my trading, how far I'm doing my life. This is a documentation of my journey. So anybody who is subscribed to my channel, I'm very thankful for you people. Anybody who is out here supporting my journey, trying to grow, trying to learn from me and grow with me, I'm proud of you people. And kindly pick the lessons from the things I've said on this channel. And if you feel you have more to say to me, contact me. I'll put my email down in the comment section. I'll pin write me a comment, send me a message in my DMs. I'm still open for anything that you want me to do. If you want me to do a full video on the flatlining of your equity curve, I'll be down to do that one too for you people. I love you guys so much for everything you are doing for me and my channel. And I'll see you guys in the next video, or 2 or 3. Have a great week, and next week I'll come here and show you exactly what I did for next week too as well. I love you guys. Peace out.